Hello friends, this is CA Ravi Bajaj and I welcome you all to my new video on Vijaya Diagnostic Centre. We are going to understand the company profile, we are going to understand how the management works and how the company is placed. We are also going to understand how the diagnostic industry is placed in India and what are the profit margins of this company. We are also going to understand how the company is working towards its expansion plans. So now I want you to continue with the video till the end. Thank you. Vijaya Diagnostic Centre was incorporated in 2002. It was listed in stock exchange in 2021. It was founded by Dr. Surendranath Reddy, who is also the executive chairman of the company, and he holds a bachelor's degree in medicine from Sri Venkateshwara University. He has a experience of more than 40 years and he has been instrumental in establishing Vijaya as the South India's largest integrated diagnostic chain. Second major name in the management is of Supriya Reddy. Supriya Reddy holds bachelor's degree in commerce from Osmania University and she has been associated with the company since 2003. Since then, she has been heading the overall strategy, clinical excellence, operations, and expansion of the company in its home markets and beyond. Because of her, in less than 2 decades, the company was able to earn revenue of over 5,400 million from just 70 million. Let's first understand the healthcare market of India. Healthcare market of India can be divided into four parts. One is healthcare delivery, second one is diagnostic industry, third one is pharmaceutical industry, and fourth is healthcare insurance. Healthcare market by itself has a market size of 10.5 trillion and which is expected to grow at a CAGR of 10 to 11%. And diagnostic industry is having a market share of 0.95 trillion, which is expected to grow at a CAGR of 10 to 12%. If we have understood what is the healthcare market of India and what is the share of diagnostic market of India, let's now break down the diagnostic market, how it is placed. Diagnostic market can be divided into three parts. One is hospital based, another one is diagnostic chains, and third is standalone diagnostic centers. Hospital based and diagnostic chain can be considered as organized sector, whereas the standalone diagnostic centers is an unorganized sector. Hospital based and diagnostic center combined have a market share of 50 to 55%, whereas standalone diagnostic centers have 45 to 50% of market share. If we want to divide the diagnostic services, we can divide it in two parts. One is pathology services, another one is radiology service. Pathology service includes examination and laboratory analysis of body fluids like blood, urine, etc. And radiology involves usage of imaging technology such as X-ray, radiography, ultrasound, CT scan, MRI, etc. If we were to understand the market share of the both, 56% of market share is of pathology and 44% of market share is of radiology. We have understood what the diagnostic industry is. Let's also understand what are the key growth drivers of the diagnostic industry. The first growth driver is the changing demography. In 2001, India was having 6.9% of population of the age of more than 60 years. This is expected to increase to 13% in 2026. So more the people of the age group of more than 60 years, there will be a need of diagnostic services which will boost this industry more. Second one is rising incomes. As the income rises, the need for quality healthcare services is also must. In 2011-12, figure says that people earning more than 0.2 million were only 16 to 17%, which has changed in 21-22 to around 35%. Basically, people earning more than 0.2 million a year are more than 35% today's in 2022 data. So more the people are earning good amount, more they will afford to have preventive health checkups, and which will boost the diagnostic industry as a whole. Third growth driver is increasing health awareness to boost the preventive and wellness testing. As the wellness test is advanced in the urban areas, or there is urbanization of the country, there will be the need of healthcare services, and which will give the boost to diagnostic industry. In 1920, 1921, we had an urbanization of 11%, which has increased to 36% in 2023, which means more there is an urbanization, more there will be the awareness for healthcare, and this will boost the healthcare industry and diagnostic industry. Fourth one is non-commutable disease. Non-commutable disease is a silent killer. In the past advancement of our healthcare, we have been able to reduce commutable diseases, but there has been a spark in non-commutable disease. Non-commutable diseases include diabetes, include cancer, diseases which are because of the lifestyle of the people. Now, in 2008, the non-commutable disease were around 19%. Cancer was around 9%. Heart-related disease were around 28%, which is expected to grow. So, it is very important to note that because of the increase of non-commutable disease, the need for diagnostic services will increase. Fifth growth driver is growing healthcare penetration. Healthcare penetration has grown in the last couple of years. In 1415, the population covered by health insurance were around 287 million, which has increased to 499 million in 1920, which shows that there is a great penetration which is going on in the healthcare insurance. As there is a lot of penetration, there will be a need of preventive health checkups and various diagnostic services, which will give the boost to diagnostic industry. Now, let us understand key risks associated with diagnostic players. First of the key risk is shortage of skilled manpower. Considerable shortages of full-time doctors and staff in diagnostic industry from several countries to recruit them on an hourly basis, with many of them visiting more than one lab. Another area of concern is the training and retention of clinical employees such as laboratory technicians who are employed at laboratories and collection centers for the collection and preservation of patient samples. Second key risk is high cost of technical advancement. Diagnostic centers have to consistently update their technology to stay ahead of the competition. However, these upgrades not only involve significant capital investment but also increase the maintenance cost, thereby increasing the overheads. Capital intensity is higher for advanced radiology and modular diagnostics, which requires high-end equipments. Third risk area, which is intense competition, there as the sector has negligible to few entry barriers and is largely unregulated. There are a lot of small players in this industry which make the unorganized sector of this industry very large. Fourth of the key risk factors is geographical concentration. Many small diagnostic chains that operate 3 to 4 centers and are concentrated in a particular place or region are susceptible to the demand supply dynamics of that particular location. Hub and spokes model. Friends, let's now understand how the diagnostic industry works in the hub and spoke model. Spokes are small centers in various small regions, which do the work of collection and also provide small services of testing like ECG testing. Hub are major centers which provide most of the radiology testing. They also have a reference lab. Reference lab is ideally one or two. All the testing done in the hub and spoke are referred to the reference lab, and the reference lab generates the reports which are to be given to the customers. This is how the whole hub and spoke model works. Friends, let's now understand what Vijaya Diagnostic have to serve to the people and what is the asset base of Vijaya Diagnostic Center. It has 30 CT scan machines. It has 8 PET CT gamma machines, 29 MRI machines, more than 250 radiologists and pathologists. Let's now also understand the geographical contribution of revenue of the company. Most of the revenue comes from Hyderabad. It has 92 centers in Hyderabad. In rest of Andhra Pradesh and Telangana, it has 31 centers, and 17% of the revenue is generated from rest of Andhra Pradesh and Telangana. It has 18 centers in Pune, which has an revenue of around 8%, 2 centers in Kolkata, and 2 centers in other regions. Total centers which it has is around 145. If we were to understand the operational metrics of the company, diagnostic centers which it runs currently is 145. The footfall in million is 3.55 million. Tests performed by the company, by the centers, is around 11.89 million. And the test per footfall comes to around 3.35 in numbers. Revenue per test comes down to 461, and revenue per footfall is around 1543. Let's now do the peer analysis of the company, that is comparing the company with the other players in the market. If we would compare the operating income of the company, Dr. Lal Pathology has 22,266 million of revenue. Agilius Diagnostic has 13,720 million of revenue. Metropolis Healthcare has 12,077 millions. Idocare has 5,718 million. Vijaya Diagnostic Center has 5,478 million, and Suraksha Diagnostic has 2,187 million. If we were to compare the revenue contribution from diagnostic and pathology, Eligus Diagnostic has 96% of its revenue from pathology and only 4% of revenue from radiology. Metropolis has 100% of its revenue from pathology. Suraksha Diagnostic has 53% from pathology and 46% from radiology. Thydocare has 89% from pathology and 8% from radiology, whereas Vijaya Diagnostic has 64% from pathology and 36% from radiology. If we were to understand the customer segment wise breakup, that is whether they are able to serve B2B segment or B2C segment. Analyse Diagnostic has 53% of revenue from B2C, whereas 47% from B2B. Dr. Lal Pathology has 73% from B2C and 27% from B2B. Metropolis has Metropolis has 53% from B2C and 38% from B2B. Suraksha Diagnostic has 94% from B2C and only 6% from B2B, whereas Medocare has 94% from B2B and only 6% from B2C. In case of Vijaya Diagnostic, it has 94% from B2C and only 6% from B2B. Let's now understand the big plans of the company for expansion. It has recently acquired Diagnostic Centre of Pune, which has around 18 centers, 3 R hubs, 3 spokes, and 12 collection centers. Acquisition cost is 147.50 crores. This has allowed them to make their mark in a new city, that is Pune, as diagnostic player. Now, with their expansion strategy and with their presence in Pune, they can expand further in the Pune district also. Another major step which they have taken is of amalgamating Medinova Diagnostic Services in the Vijaya Diagnostic Centre itself. Medinova Diagnostic Service is a subsidiary of Vijaya Diagnostic Centre currently, and now they have proposed to issue one share of Vijaya Diagnostic Centre against 22 equity shares of Medinova to the general public. Currently, Vijaya holds 62.14% of Medinova and 37.87% is held by public. Once this merger is done, it will give 100% of the holding to Vijaya Diagnostic, and then Medinova would be merged to Vijaya Diagnostic Centre, and there won't be any Medinova Diagnostic Centre as such. Let us understand the financials of the Vijaya Diagnostic Centre. If we were to refer recent quarter earnings, it has given 182 crores of sales, which has a 32% year-on-year growth rate. The operating profit margins are also very good. That is 40 to 42% of consistent operating profit margins are there. It has a gross profit margin of around 87 to 88%, which is very much consistent. And it also has net profit margins of around 20 to 22% consistently. If we would understand the cash flow statement, the CFO, that is cash from operating business to EBITDA ratio, is more than 75% consistently, which shows a good sign as to their collection of cash. Another important ratio which has to be seen is debt to equity, that is only 0.39, and the return on equity is around 20% on an average. If we were to understand the asset base of the company, currently it has around 982 crores of the asset base, out of which it has net fixed asset of 742 crores and investments of around 109 crores. So, all in all, company's financials, fundamental financials, are looking very good. Lastly, we would also try to understand what is management's guidance in the recent quarters. In quarter 2 of FY 24-25, it provided year-on-year growth of 32%, of which 23% was delivered organically. Company has launched operations in hub center in Ongole this August, and the company is expecting this center to break even within 2 to 3 quarters. Company has started state of art facility in Nizamabad, Company has identified Bangalore as a new market for its organic expansion. So we may see the company to organically grow in this region in coming 1 to 2 years. Management is expecting a double-digit growth of for PH Pune for nearly 4 to 5 years. That simply means management is keen in investing in the centers in Pune because it has identified it as one of the major regions for its expansion. Company is planning to add 10 to 12 hubs in coming 2 years, which will have a capex of around 200 to 230 crores. As companies having healthy internal accruals, it may not need outside funding. All in all, company looks very good, and the expansion plans of the company are also very good. Company's management's guidance for its expansion and the company's current expansion policies are also giving a positive notes. So friends, I want to just give a disclaimer about this video. This video is only for education purpose and only to spread the knowledge. It is not to be considered as a stock recommendation. You should ask your advisor and do your own analysis before investing in any kind of stocks. So friends, you must have liked my video, and I will bring more such videos for your knowledge. If you have not subscribed to my channel, please do subscribe.